Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, in the wake of the crackdown by RBI on Paytm Payments Bank, a lot of investors are worried about their money, that's being invested through the Paytm Money app. So in today's episode, we have with us Dhirendra Kumar to decode what really is happening with Paytm and should you be worried about your money. Welcome, Dhirendra.
Thank you.
To start with, can you please explain what really is this Paytm crisis all about?
Paytm crisis is all about Paytm Payment Bank. When you interact with Paytm, the app, you don't get to see the Paytm Bank or this or that. When you open a bank account, that is opening at Paytm Bank. When you use the app, you are dealing with multiple entities. Whether it be Paytm Bank or whether it be Paytm Money, where you buy all the shares or mutual funds.
Right.
Or it could be an intermediary to many other things, like buying a plane ticket. So it might be dealing with airlines, But primarily it is actually an enabler, a facilitator. So one is the wallet business, which is using UPI, which has, revolutionized the way people transfer money from one to another. Paytm has a large business whereby the businesses accept money based on their number and with a QR code. And that has become a very magical thing that has actually catalyzed the whole business process. And that is where those businesses have their bank account in Paytm Bank. The law in this country is that if you have to open a bank account, everybody has to comply with the KYC norms.
Right.
KYC norms basically mandates that everybody's identity and proof of residence should be validated. And if you don't validate this, it is considered not good enough. It is considered a crime. Maybe it is deliberate, maybe it is in its effort to speed up things,
Right.
Or maybe it is actually, it could also be a gray area in terms of interpretation, what is being explained to us. But this is not a one-day thing. This kind of a stringent action has been taken based on after giving repeated warnings. So this can actually be a problem for the Paytm Bank. And if Paytm Bank stops working, there could be problem for many other entities as well dealing with them.
The businesses
The businesses there. But I don't think it matters much for the
individual
and also I think overall safety of these businesses, anybody dealing with them is not doubtful, simply because RBI has given time. They don't want to cause disruption. There could be problem. There could be a reason that Paytm Bank goes under gradually, assuming that the worst case scenario. Everybody will have to, all their entities who have opened their bank with Paytm Bank, Paytm Payment Bank, they will have to open a bank account with somebody, or they might have bank account with somebody that needs to be connected. After this clampdown, they have now gone about hiring or getting a set of advisors. I would say adult supervision for a company, for a business which is relatively new. It came into existence and became large and revolutionized a very interesting and a useful part of ability to transfer money from one to another. And that is in the DNA of this business, because if it would not have ventured in an area, if it would have thought about being completely legitimate and compliant, then this business would not have come into existence. Because the initial days, there was no law. It was, you can call it was not Wild West, but Wild East, so to say. And the demonetization turned out to be a great opportunity for this business to come to life. This was coupled with, or alongside, there was another development going on, which is UPI, which is a revolutionary digital payment mechanism emerging in India, which the whole world is looking at. So in that sense, it's an interesting company, it is a revolutionary company, but that does not give them a right to not be compliant. And if they don't comply, there could be problem for the Paytm Payment Bank. And the feel that you get when you use the Paytm app is that all of it is the same. It is not true. There are different entities who are operating. That is almost like a lead generator or an execution platform or the front end for many businesses which Paytm has.
Okay, in such a scenario, what about investors who have invested their money through Paytm Money?
All the investors of Paytm Money, their money is safe in mutual funds, simply because the money does not does not reside with Paytm Money at all. Recently, SEBI has made people basically buy and sell mutual funds. That's all there to it. And in this case, when you buy a mutual fund, your money gets debited and it can go only to two entities. One is to the mutual fund company directly, or to the stock exchanges clearing corporation. If it can't go to any third entity.
So it does not lie.
It does not lie. It does not reside anywhere else. Second is that when you redeem your money, the money comes directly to your bank account. It does not go to Paytm Bank. It is not that Paytm Bank will settle it somewhere and get the money and then give you a part of that money, or keep anything with themselves. They can't. The price is what you are aware of. You place a sell order, and the money comes based on their business rules, T+2 or T+1 or T+3. The money gets into your bank account, and it is all digital. And there is no other way you get your money. Only for very old investors, people will get a check from a fund company, and that will come with your postman will deliver it. But that is only in cases where you don't have the electronic transfer mechanism, or the banks which are modern, or the fund companies don't have that information for old investors. But a substantial number of investors, they are far and few. So your money is safe when it comes to mutual fund through Paytm Money.
Okay. To avoid, such confusion, anxiety, heartburn, what can investors do in the future?
One is that, you can reduce your worry only if you understand how things work. So it's very important for them to understand how it works.
Right.
And because if every day the headline is that Paytm is in trouble, and you are investing through Paytm, you will think that, it has something to do with me as well.
Right.
So how things work and how things are regulated, how things function is very crucial and you don't have to get into the nuts and bolts of, knowing it in great detail simply because you're not going to run that business. It's important to run how things work because Paytm Money, it's a wallet. Then they have an associate company called Payment Bank, Paytm Payment Bank. And Paytm Payment Bank is owned 49% owned by the Paytm, 197 Communication, which is the company which owns Paytm brand and the app, and they own that bank. So all the trouble is with the Paytm Bank. Then comes Paytm Money. It is a separate entity, and it has to comply with the rules framed by SEBI. Right. Because it is a stockbroker, and as a stockbroker it can sell mutual funds, and as a stockbroker it can sell shares. You can buy shares, and you can actually transact in the derivatives of shares. When you do this, this company has to comply with all the rules applicable to a stockbroker. This much capital, this is how you will function, this is how you will operate, this is how you will report the customers' information, this is how you will deal with their money. And in that sense, once you understand how things work, that is the only reassurance. Because if you think that, something messy is happening and the noise that you hear around Paytm Money, because the biggest noise coming around Paytm Money is completely different. Paytm Money stock, IPO, the company went public, and then company went public, and the IPO was at a time when there was exuberance, and then the stock price fell by 50%. People are disappointed, and now it has fallen again. It is at its lowest price. Right. So the bigger noise is about the steep fall in the value of the stock, and but there is no surprise, because IPOs or shares are supposed to be that. They sometimes multiply your money, sometimes you lose your money, and it is important. And there was nothing which is not known to investors about Paytm, that it is not making money, it is into losses. But people believed in the future of this business, and there could still be a future ahead for them. So now it is trying to deal with all the troubles that it is in, and it is maybe it starts behaving differently.
So that was about Paytm Money. But even if the investors are investing through any other fintech platform, they should not worry. Their money is safe.
Here I would like to explain that how things work, because Paytm is one entity which also has a payment bank. But there are brokers. There are brokers. You might be investing through Zerodha. You might be investing through Grow. You might be investing through ET Money. And these are entities which are operating either as a stockbroker, or they are, ARN holders, or they are RIAs. And if you invest through any of these apps, here again the same rule applies, that the money must go to the stock exchange clearing corporation or to the fund companies directly. Right. No, it cannot reside anywhere else. And because of the competitive pressure, everybody is selling their direct plan. the cheaper plan. And for them, SEBI wanted to regulate those entities who are selling, the direct plans. So what they have done is they have permitted two new kind of entity, which is execution only platform, EOP1 and EOP2. EOP1 is meant for the people who are not stockbrokers, and EOP2 is meant for those people who are stockbrokers, and but they will have to become EOP2, take a license from the stock exchange, and then get into the business of selling the direct plans of mutual fund. So SEBI has been very worried about this. Mutual fund or dealing with mutual fund is relatively safe, and what has happened in recent years makes them even safer. And it is very important for you to understand that what is the kind of risk that these things are taking care of. This does not mean that they are free from market risk. The markets will still be volatile. The companies where the mutual fund invest, they can still go under. They can sometimes be extremely volatile. The bond which some of these funds buy can again default sometimes. You have to be watchful about what you are getting into. But when it comes to systemic risk, I think it's, no system is foolproof, but, it is way ahead of, anybody's imagination, because mutual fund, the way they have come up in recent times, I know based on my own experience of interacting with the regulator that they are extremely worried about leaving any small, because in most cases, people go about fixing a problem after some problem has happened. Here, they worry about it well before something might happen.
All right, then you have it there. You don't need to worry. If you're investing through Paytm Money, your money is safe with the mutual fund. Now we have a viewer's question that we would like to take. Amit has asked, he has an irregular income stream and some debt to pay. How can he invest small amounts to achieve regular income, retirement, and child education?
We at Value Research, we are a big believer of SIP. Big believer of SIP because, regular investing reduces your risk. It fits in with your habit. It fits in with your income cycle. But what if your income cycle is irregular? I think, it's a very important question, and it is applicable for most Indians too, who are not going to get their salary on first. But they might be earning, and they might be earning well. It will be, inconsistent. It might be irregular. I think for them, I would like to give them a very clear plan. One is to have that emergency corpus. 3 months of your consumption need, put it in a liquid fund. Don't look at it. And make sure that you always have it. Then think of, and today it has become possible that whenever you have surplus, you can invest. So till you are not left with just 1 month of emergency money. Whatever money that you earn, invest that in a fund of your choice. That is not a SIP, but it is based on, whenever you have the money, invest it. But make sure that you have at least more than 1 month's emergency fund still lying. And keep your income requirement, withdraw your income requirement from that liquid fund, not from these funds. So whenever you get that money, invest. Whenever this money is consumed, well before consumption, replenish it. So all the money that you earn either should be buying a liquid fund or the equity fund. Equity fund which will keep lying there, that is meant for your child's education or any long-term goal. And the short-term money, create that buffer so that you don't get worried about the long-term investment that you are making.
All right, then that's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Thank you for watching. Take care. Bye for now.